40 Stock Market Terms You Need for Trading in 2022. To help you more effectively understand the stock market and trading, learn this key terminology. You'll quickly become familiar with the top 40 stock market terminology with this video. Buy. To invest by purchasing stock in a corporation. As a trader, you typically purchase stocks when you anticipate a stock's price to increase. Sell. To offer for sale the shares you now hold. Shares are typically sold by traders when they see a chance to profit or when they believe the stock's climb is coming to an end. Bid. When a market participant offers to purchase shares. A stock will get bids from traders at a specific price. Ask. When a trader makes an asking price offer to sell their stock. A trader will place an order requesting purchasers to purchase shares if they have them and want to sell them at a specific price. Bid-ask spread. The difference between the highest price at which someone is willing to buy shares and the lowest price someone is willing to sell shares. Bull market. A state of the market when stock prices are constantly increasing. Bull markets are characterized by traders' and investors' excitement and confidence. Bear market. The opposite of a bull market is a bear market. It's a market where costs are always going down. In bear markets, the future for a business, an industry, or the economy as a whole becomes negative. Less people are eager to buy stocks now, and many more are looking to sell them. Prices drop as a result of this. Limit order. A style of stock market order that states that an execution must take place only at a specific price. An investor could, for instance, place a limit buy order to buy 100 shares of a stock at $15.60. The broker will try to purchase 100 shares for $15.60 or less. Market order. This stock market order specifies that a purchase or sale should be made as soon as possible, at the best price that is currently available. If there isn't enough volume, market orders may be pricey. Never use a market order when trading penny stocks. Good till cancelled order. This market order remains open until you complete the trade or cancel the order. Also known as a GTC order. Day order. This market order will be automatically cancelled at market closing if it is not filled during the trading day. Volatility. The statistical measure of how much a stock moves up or down. Stocks that fluctuate drastically are referred to as volatile stocks. They come with more risk but also provide enormous potential for reward. Liquidity. The indicator of a stock's ease of purchase and sale. You'll typically find it simpler to initiate and exit a position when there are numerous buyers and sellers actively trading the stock. The stock has greater liquidity. Trading volume. The total number of shares that are ever traded. Since there is more liquidity as a result of higher trading activity, positions can be entered and exited more quickly. Going long. When you go long, you buy stock in the anticipation of a rise in share price. Going short. When a trader attempts to make money off of a stock's declining value. Borrowing shares from a broker, short sellers sell them in the hopes that the stock price will fall. After that, they repurchase the shares and give them back to the broker. Averaging down. In this scenario, a trader increases their stock purchases as the stock's price declines, bringing the average cost of the position down. Long-term investors may benefit from averaging down, but we do not advise it for day traders. Market capitalization. Market capitalization, also known as market cap, is the total value of all a company's shares. For example, if a company has 1 million shares outstanding and the stock price is $10 per share, the market cap is $10 million. Public float. The phrase for freely traded shares of a firm. As active traders, we frequently search for firms with a low float since their prices are more volatile. Outstanding shares. This is the total number of shares in a firm. Both the publicly traded float and restricted shares are included. IPO, Initial Public Offering, or IPO. It occurs whenever a business sells shares on the stock market for the first time. Secondary offering. Even after its shares are sold on a stock exchange, a firm might raise money by selling shares. It's referred to as a secondary offering. Blue chip stock. These are large, stable, well-known companies that are often household names. Forex. Foreign exchange is abbreviated as Forex. The phrase describes how currencies are exchanged on a worldwide scale in a way similar to how stocks are traded. Hedge funds. A sort of investment fund known as a hedge fund frequently employs alternative tactics for trading and investing. Mutual funds. For the purpose of investing in stocks, bonds, and other financial assets, mutual funds are collections of investor capital. ETFs. Exchange Traded Fund is shortened. ETFs are capital pools utilized for financial reasons, much like mutual funds. However, you can buy shares of the ETF on a stock exchange rather than wire money into the fund. ADR, short for American Depository Receipt. Shares in foreign stocks are represented by these certificates. ADRs enable investors to buy and sell foreign stocks on the American Stock Exchange. Beta. A way to gauge how well a stock has performed in relation to the larger market. Traders can use beta to determine how risky it is to keep a stock. Stockbroker. An agent who makes stock purchases and sales possible. Day trading. The act of making and taking out stock trades all in one day. Day trading, for instance, is when you buy a stock in the morning and sell it in the afternoon. Dividend. When a business distributes a percentage of its profits to its shareholders. Dividends are typically a priority for retirees and long-term investors. Stock charts. An illustration of the price history of a stock. Traders interpret a stock's price activity and pattern using stock charts. Stock exchange. An organization where stocks are purchased and traded is a stock exchange. The New York Stock Exchange, NYSE, and the Nasdaq are the most well-known stock exchanges. Execution. The accomplishment of a stock trading order is called execution. For instance, you instruct your broker to purchase 100 shares of ABC at $10. That order is executed when that deal is finished. Margin. When traders borrow money to trade shares, this is known as margin. With margin, you can gain and lose money more quickly. Before you begin margin trading, keep in mind that 90% of traders lose. Moving average. A popular technical indicator that traders use to view the price trend of stocks on stock charts. The stock price over a specific time period is averaged to create the moving average. For instance, to get the 20-day moving average, the stock price on each of the previous 20 days is taken, and the average of those 20 values is determined. Stock portfolio. An investor's stock collection is known as their stock portfolio. Trading mentor. A seasoned trader who may accelerate your learning curve by imparting their knowledge of the markets and their trading strategies. Price quote. A price quote is the value of a stock at a specific moment in time. To analyze stocks more effectively and locate good trading setups, traders frequently need the most recent price quotes. Price rally. A price rally occurs when a stock's price increases considerably more quickly. Sector. The shares of businesses in many industries and market segments make up the stock market. These are the sectors. Ticker symbol. A distinctive group of letters and/or numbers used to identify a stock. For instance, Apple is listed on the Nasdaq under the ticker AAPL. Dividend yield. This speaks to how much a firm pays out in dividends in relation to the value of its stock. By becoming familiar with stock market jargon, you'll have the fundamental tools you need to gradually move up the ladder of success while addressing new trading ideas and methods. When you are familiar with stock market terminology and prepared to go forward, it's time to think about your market approach. Luckily, I upload videos all the time to help you try and get a better understanding with personal finance and tips and tricks in the market. If you have enjoyed this video, please give it a like and subscribe. Also turn on the bell notifications so you don't miss a future upload. Thanks for watching and I will see you all next time.